everyone. We'll just give a couple of minutes for all the attendees to join, and then we should start. Okay, hello everyone. Thank you all for joining. Just want to introduce myself. My name is Bandit Fernandez. I am the Global Marketing Manager at CEIC Data. So today's webinar will be presented by my colleague and Head of Macroeconomic Research at CEIC Data. His name is Alex Ivanov. So I'd like to thank you all for joining us today. We have attendees from different parts of the region. So for most of you who do not know CIC Data, I'd like to introduce CIC Data as a company. So we provide more than 5 million macroeconomic time series data in more than 200 economies sourced directly from primary sources, as well as we have our analysts that are present in more than 20 key emerging markets. So that's what we do as a company. Let's head into the webinar and what we're going to be covering today. So just give you a brief overview. So the novel corona disease outbreak is already having a major impact on the Chinese economy. The Lunar New Year has stretched into a third week with many factories and businesses shutting down. Panic over the rapid spreading disease has seriously disrupted the economic activity in China, triggering a sharp financial market decline and fears over a considerable slowdown of the global economy. So in today's webinar, we will be focusing on certain topics like what does the disease outbreak data show and how did the markets react. We'll be talking about the coronavirus against other epidemics in the past, how bad the outbreak has been compared to the previous, what's the economic impact of other diseases like SARS and influenza in the past, what are the most vulnerable regions, groups, and industries, how the Chinese government dealt with them. So these were the topics that we are going to be talking about. We'll also be focusing on how it impacts Asia and the global economy, and what could we expect from the Chinese government in reaction to the economic slowdown. So I'd like to also take some time and introduce our presenter, Alexander Ivanov, and kind of give you a profile of who he is and what he does at the company. So Alexander is the head of macroeconomic research at CIC Data. He plays a very pivotal role in our macroeconomic and quantitative analysis. He previously worked with our sister company, EMIS Insights, as a researcher and has been in charge of the industry analysis for China and industry forecast for various emerging economies. He's among the founder of the CEIC leading indicator, a proprietary dataset aimed to predict the business cycle in key developed and emerging economies. He holds a master's degree in applied mathematics and has specialized in mathematical modeling in macroeconomics at the Sofia University. Alexander is a doctoral candidate at the Warsaw School of Economics and a research scholarship holder at the Bulgarian National Bank. So that's quite an impressive profile of Alex. And before I give control to Alex, who's going to be presenting his screen, I'd like to just go through a few points on the webinar. So during today's webinar, you'll have the opportunity to ask questions. You can submit your questions using the panel on the right. So simply click the orange arrow and you can answer, you can ask as many questions as possible. At the end of the webinar, we will try to answer as many questions as possible. We will also have a PDF shared with everyone at the end of the webinar, as well as the recording link. The handout section on your right hand side will be the place where we will upload the presentation as well. So over to you, Alex.
Thank you, Bonnet, and thank you everyone for joining this webinar. So just to confirm, do you see my screen? Bonnet, can you see my screen?
Yes, Alex, I can see your screen.
Okay, so before I start with the economic impact and our estimations, just a quick update on the latest data provided by our main sources that we use, the World Health Organization. The World Health Organization for the global data and China's National Health Commission for data on China. The data presented here, as well as most of the data used in this presentation, are extracted from the CEIC database. And at the end of this presentation, I'm going to give you some more information on where you can find the latest data, news and analysis on the topic of coronavirus. So as of yesterday, the number of confirmed cases globally by the World Health Organization has reached almost 43,000 cases, and the number is estimated to exceed it for 45,000 cases as of today, of which 99% of the cases, or 42,708, remain in mainland China, according to the World Health Organization, followed by Hong Kong with 49 cases, Singapore with 47 confirmed cases, Thailand with 33 cases, and Japan and South Korea with 28 cases each. So even though the number of confirmed cases continues to increase, it seems like the number of daily new confirmed cases has reached a peak of 3,924 globally on 5th of February, and turned to a decline since then, falling to 2,068 as of yesterday, according to the World Health Organization data. However, the number of death cases continues to increase, reaching 1,018 as of 11th of February. This is according to the World Health Organization, because today there were some changes in the diagnostic methods from the National Health Commission in China, so the number of confirmed cases soared for just one day. So these are the data published by the World Health Organization, while the numbers provided by the National Health Commission for China are a bit higher. and in one of the next slides, I'll give you more information about the discrepancies between the data published by the World Health Organization and the one published by China's National Health Commission. On China, as of yesterday, the latest available aggregated data for the whole country, the number of confirmed cases reached 59, almost 60,000, 59,804 confirmed cases. This was after the changes in the diagnostic methodology that was announced today, which added 15,000 more confirmed cases in China, mostly in the Hubei province. So more than 78% of the total confirmed cases are in the province of Hubei, with majority of them registered in the city of Wuhan, followed by the province of Guangdong with 1,241, and Henan with 1,069, and Zhejiang with 1,149. So the number of dead cases as of 11th of February has reached 1,113, and there are new data that were released today that show more cases based on the new diagnostic methodology. So as per the latest data, the number of dead cases represent only 23.5% of the number of recovered, which show the relatively low mortality of the virus. We have much less number as of now. We have much smaller number of dead cases compared to that of the number recovered. However, this was not the case during the whole period of the epidemics. For example, over the last week of January, which was the period that preceded the peak of the virus in terms of number of confirmed cases, the number of dead cases was exceeding those of the recovered. To be more specific, as of 27th of January, for example, the ratio of deaths to recovered hit a peak with 160 dead cases against only 60 recovered patients in China. As per the latest data, the estimations vary across the sources, the different sources, and based on whether we talk about data only for China or globally. But as per the latest data, the mortality rate of the virus in China is around 2.5%, which is below the peak of 3.2% in the last week of January. This is only for China. So we see a decline in terms of the mortality rate compared to the last week of January. However, the mortality rate has been growing over the last week, increasing from 2% on 5th of February to 2.55% on 13th of February. So as you can see from the map, the measures of the Chinese government to prevent an even larger scale of contagion across the country are so far successful. The infected people remains mostly concentrated in the province of Hubei, the majority of them in the city of Wuhan. More than 78% of the total number for China, and the provinces with relatively high number of confirmed cases, more than 500, are in the southeast provinces, as you can see. Provinces like Guangdong, Hunan, and Jiangsu that are on the southeast. Here you can see what I've mentioned about the discrepancy between the data reported by the two main sources that we use, the international data for the world by the World Health Organization and China's National Health Commission data. So when looking at the data on the coronavirus, we should bear in mind these discrepancies in terms of data on confirmed cases and in terms of data on death cases reported by both organizations. That's of course not intentional, but it's rather due to methodological reasons of both organizations. The World Health Organization tends to underestimate the number of confirmed cases of infected people in China, as well as the number of deaths compared to the data reported by the local National Health Commission. And that was true even before the new data released today by the Chinese authority. Now, as of today, the discrepancies for the latest data is even larger because the revision that was made by the National Health Commission was not yet made by the World Health Organization. So now there is a very big gap between the data of the two organizations. But in the longer perspective, the discrepancies are getting smaller over time. They are, until yesterday, before the revision of the data, they were around 4% more reported cases by the National Health Commission compared to that of the World Health Organization, and around 10% cases more for deaths reported by the National Health Commission of China over the World Health Organization. However, as compared to the last week of January, the discrepancy rate was more than 35% for the confirmed cases and more than 30% for the death cases. So if you look at the earliest data on the number of confirmed cases and deaths, you see big differences between the data reported by two sources, and over time this gap has narrowed to around 4% now. By looking at the data on a province level provided by the National Health Commission for China, excluding the Hubei province from this chart because it will be an outlier, we can identify three clusters based on the number of confirmed cases and its share of the provinces or the municipalities' population. So on the chart, the x-axis reflects the total number of confirmed cases in the respective region, and the y-axis shows the share of the population measured in per miles, and the size of the bubbles reflects the total population. So the first cluster of regions shown with the red bubbles are the regions with the highest number of confirmed cases and regions with high shares of confirmed cases measured as share of their population. As it was shown on the previous slide, these are mainly regions in the southeast China that are relatively close to the Hubei province, and most of them are provinces with relatively large part of the population for some of the regions with living standard higher than the average for the whole country, with intensive economic activity, transportation, and tourism, all of these representing factors that affect the number of cases, of confirmed cases. To some extent, all of these factors represent auxiliary factors for the higher number of these cases, contributing to the major factor, which is the close distance to the Hubei province and specifically to the city of Wuhan. The other cluster, the bubbles in blue, are regions with relatively low number of confirmed cases and low share of their population, including provinces with less than 100 confirmed cases like Inner Mongolia, Jilin, Ningxia, Xinjiang, as well as provinces like Qinghai with only 18 confirmed cases, and Tibet with only 1 confirmed case, as reported by the National Health Commission so far. So these are mostly regions in the west and the north parts of the country, far from Wuhan, and in most of the cases, of course, except rich provinces like Inner Mongolia, these are regions with lower living standard and low economic activity than the average for the country. And while for these two clusters, the reasons for both of them to be there are straightforward. There are regions that are, okay, for the red cluster, we have regions that are geographically closer to the city of Wuhan, and we have regions with relatively high economic activity, tourism, and transportation. The ones that are the most exposed to the contagion. And the opposite for the blue one, we have regions that are far from the city of Wuhan, low economic activity, low tourism activity, etc. But for the third cluster that we have, the green one, these are regions with relatively the same number of confirmed cases as the blue ones, but in terms of the share of confirmed cases as per mile of the whole population, the confirmed cases are closer to the ones of the red cluster. One of the reasons for that is obvious, as you can notice from the size of the circles. These are mostly cities like Beijing and Shanghai and the municipality of Chongqing, and provinces of Hainan and Heilongjiang, all of them with relatively small population as an administrative units compared to the other provinces of China. So this is one of the reasons we have relatively low population, which means that we'll have higher share of the number of confirmed cases. But there are also other underlying factors, obviously, because provinces like Tianjin and Ningxia are also small population provinces, but they are in the blue cluster. So there are obviously other underlying factors for these provinces to be there, like high economic activity and travelings for Beijing, Shanghai, and Chongqing, as big trade, financial centers, as big tourist destination for foreigners, etc. And all of them have higher living standard than the average one for China, as measured with GDP per capita. For the Hainan Island, it's a common destination for tourists, especially for tourists from Wuhan during the Spring Festival. The local authorities in Hainan actually reported that most of the confirmed most of the confirmed cases in Hainan province are actually Wuhan residents. So while the case of Heilongjiang is quite different than the other four, Heilongjiang is neither rich like the other four regions, nor close to the city of Wuhan. It actually has the 5th lowest GDP per capita in China on the one hand, and on the other hand, it's located on the northeast part of the country near the North Korean border, which is far from the Hubei province. But there are reasons for this province to be in this cluster. So one of the factors for the high rate in that province, of course, it could be the Harbin Ice and Snow Festival in January, which makes the province a popular tourist destination in that time of the year. But another factor is the relatively high internal migration. So being one of the poorest provinces in China, many people at working age work in the richer southeast provinces that are the most affected by the virus. And many of these people traveled back to their homes, to their hometowns in Heilongjiang for the Spring Festival, which explains the higher level of number of cases for this province. How did the markets react to the contagion? China's financial markets were closed due to the Spring Festival, which was the time when the number of confirmed cases has increased dramatically. Consequently, the fears about the high contagious virus and its impact on China's economic activity triggered a plunge in the first trading day after the Spring Festival. On 3rd of February, the Shanghai Stock Exchange opened with an 88% drop of the Shanghai Composite Index, which was the biggest fall in more than 4 years. The Chinese renminbi also weakened as the spot exchange rate against the US dollar jumped to 7.03 or 1.44% percentage point higher than it was on 23rd of January when the stock exchange closed. The market sentiment improved slightly after that, though, with the spot exchange rate to the US dollar decreasing to 6.99 on 7th of February, which was just above the levels in the beginning of the year. And since then, the renminbi stabilized at that level until it started to depreciate again since today's news about the increase in confirmed cases and deaths. Compared to the international markets, the Shanghai Stock Exchange experienced the largest decline among the largest equity markets, followed by Hong Kong. The Hang Seng Composite Index dropped by 9.3 percentage points on the 3rd of February, the day when the Chinese markets opened again. And in UK, the main index dropped by 8 percentage points, while in the US there was a decline in Nikkei by 4.5 percentage point for the same period. Sorry, Dow Jones dropped by 3.2 percentage points. Dow Jones in Europe, Europe stocks dropped by 3.2 percentage points, while the S&P 500 decreased by 2.4 percentage points on 3rd of February compared to 17th of January when the markets hit a local peak for this period. For the commodity markets, as you can see on the chart, the biggest decline was registered for metals, which is explainable because China represents a big market for metal products. So the price of the metal declined over fears that the Chinese economy will deteriorate, and which will affect the demand for metals. raw materials decreased by 2.3 percentage points for that period, followed by silver, textiles, foodstuffs, fats and oils, while gold was the commodities that registered an increase during that period. As always, gold was considered as a safe haven, and there was a increased demand for gold during the market decline. Here's a chart to compare the scale of the coronavirus against one of the two previous disease outbreaks that had high impact, namely SARS in 2003 and the outbreak of Ebola in 2014-2015. You can see that in terms of the number of confirmed cases, the coronavirus developed much faster, with more than 4 times the confirmed cases of both SARS and Ebola for the same period after the disease outbreak in terms of number of days. The disease outbreak of Ebola flattened out at less than 15,000 confirmed cases, while that of SARS flattened at less than 9,000 cases, which is far less than what we have for the coronavirus now. Here is another chart showing the good news for the virus, that the mortality of the coronavirus is actually much lower than that of the previous disease outbreaks that happened recently, not only in China. So on the x-axis of the chart, you can see the mortality rate for each of these disease outbreak measured because it covers a long period of time, but this is the mortality rates peak of these disease outbreaks. And the y-axis shows the number of confirmed cases. So the bubble size is the number of dead cases for each of them. So here you can see higher is the number of confirmed cases of the coronavirus compared to the other disease outbreaks. On the one hand, but on the other one, you can see how low is the mortality rate of the coronavirus compared to the other diseases. So the mortality rate of coronavirus, as I mentioned at the beginning of this presentation, vary from 2.5 to 3% based on the depending on the sources and the coverage, with around 1,200 death cases so far. For Ebola, as you can see the big circle, for Ebola, the most deadly of the recent diseases, the mortality rate was more than 75%, causing the death of more than 11,000 people, mainly in Africa. SARS, another disease outbreak that affected China in 2003, had a mortality rate of around 10% globally and around 6.5% in China at the peak of the disease outbreak. The mortality rate of H1N1, the swine flu, hit around 10% at its peak before it declined to the levels of less than 5%, while that of the Middle East coronavirus in 2012 had a mortality rate of more than 35%, even though the confirmed cases were lower than the other disease outbreaks. Going to the economic impact of the disease outbreak, we estimated the economic impact of the 3 recent large-scale pandemics in China and how they affected the Chinese economy, and the areas of the economy that are traditionally the most vulnerable to such events, like tourism, retail, transportation, etc. As you can see on the chart, SARS was the only one of the three disease outbreaks that had significant impact on the economy. We estimated this impact at 0.2 percentage points, while the impact on the overall economy of the other two viruses was insignificant. For the different industries, you can see that the one again, SARS had the biggest impact on the three industries, even though the other disease outbreaks had some impact on the primary and the services industry, and both of them have had no impact on the secondary industry, on the manufacturing. We estimated the impact of the SARS on the primary industry at 0.3, negative impact of 0.3 percentage point, 0.2 on the secondary industry, the manufacturing, and 0.4 on the services industry. For the tourism, which is usually together with the transportation, tourism is usually the most affected sector of the economy from such events. So for the tourism, you see that the three viruses had some impact at different extent, but three of them had some impact on the Chinese tourism. Again, the biggest impact was came from SARS with 20.7 percentage points impact on tourism revenue, and more than 16 percentage points on the tourist arrivals, while the other two viruses had some impact, but much lower than that of the SARS virus. And for the retail sales, the picture here is quite different. Age 7 and 9 is estimated to have no impact on the retail sales in terms of volume. SARS again had the biggest impact, but the other virus, H1N1, also had an impact on retail sales, which was comparable to that of SARS. On this table, you can see the estimated impact of SARS on the Chinese economy in more details. So based on our results, not surprisingly, accommodation and catering, as well as the transportation industries, were the ones that were most affected by the SARS virus. The overall impact on the Chinese accommodation and catering industry of SARS was 1 percentage point, with 20.7 percentage point impact on the tourism revenue and 16.1 percentage points impact on the tourist arrivals. The impact on the transportation industry was 1.3 percentage points, while that on the overall services industry was 0.4 percentage point, making the services industry the most affected one compared to the primary and the secondary industry. That's always the case because it includes the tourism and the transportation industry. Retail sales were also affected with a 1.2 percentage point impact. In terms of the policy measures of the Chinese government to combat the impact of SARS on the economy, the total government spending annual growth rose from, as you can see on the third and the fourth column, rose from 11.2% in Q1 2003, the quarter before the start of the SARS disease outbreak, to 20.9% in the second quarter when the SARS disease outbreak had started. The impact of SARS on government spending, we estimated this impact at 2.3 percentage points and 2.4 percentage point on impact on the fixed asset investment made by the local governments in China, which is one of the main transmission mechanism for fiscal policy in China, is stimulating the economy through fixed asset investment by local government. In terms of monetary policy, SARS had 0.6 percentage point effect on the money supply, indicating the efforts of the People's Bank of China to help the government to support to stimulate the economy. On this chart, you can see the economic impact of SARS on a regional level for China. The y-axis shows the estimated impact of SARS on the region's average GDP growth during the entire period of the disease outbreak, while the x-axis shows the change in GDP growth in Q2 2003, the quarter that was the most affected, compared to the previous quarter, Q1 2003. According to our estimations, the SARS disease outbreak was among the main reasons for the growth slowdown in some of China's regions in Q4 2003. The regions, as you can see on the chart, the regions with the biggest slowdown, Beijing, Yunnan, Guangxi, Shanxi, were among the regions that were the most affected from SARS. On the other hand, the regions when the growth accelerated the most during this quarter compared to the previous one were the regions with no significant economic impact from SARS, like Inner Mongolia, Ningxia, and Hebei. Going to our forecasts, we developed 4 scenarios to estimate the impact of the coronavirus on the economic growth in 2020 of China, some major Asian countries, and the global economy. We are still expanding the model, trying to cover the estimation of more countries, but we started with the ones that we believe are the most affected from the disease outbreak in China. So the first scenario, the neutral one, is in line with the latest IMF forecasts before they revised their forecasts considering the disease outbreak. So the neutral scenario is the one for which the effect of the coronavirus is neutralized, which is an estimation of what the growth would have been if the current disease outbreak didn't occur. Even though this scenario is practically impossible because the outbreak already occurred, it helps us to estimate better the impact of the coronavirus on the economic indicators that we included. So in the optimistic scenario, we assume that the disease outbreak measured as a number of confirmed cases will flatten out or will have zero growth by the end of February. In the baseline scenario, the disease outbreak gets flat by the end of March, while in the pessimistic scenario, it's flattened out by the end of April. So these are our 3 scenarios compared to the neutral one. So for China, The neutral forecast before the disease outbreak was for a growth of 6% in 2020. However, with the three scenarios, according to the baseline scenario, based on our estimation, the real GDP will slow down to 5.49% for the whole year, with bigger impact on the growth in the first and the second quarter, and maybe slight improvement in the third and the fourth quarter of the year, thus reaching 5.5% growth. In the optimistic scenario, which assumes that the disease outbreak will be under control by the end of February, by the end of this month, under the optimistic scenario, our forecast is for 5.71 percentage growth for the Chinese economy for this year. So this will be due to the lower growth in the first quarter, that will be partially offset with stronger performance in the remaining three quarters. And the pessimistic scenario is for 5.3 percentage change of GDP for the whole year. The pessimistic scenario assumes that the Chinese economy will be directly affected by the disease outbreak for the whole first quarter and for the first half of quarter two. So our worst case scenario for the Chinese economy will be 5.3%. Of course, this depends on other factors that are not considered in these revisions, like the outcome of the negotiations with the United States on the trade deal, factors like the outcome of the presidential elections in the US, and all of them are bearing in mind the long-term trend of slowdown of the Chinese economy. So here, the only with these revisions, the only thing that we consider is the effect of the disease outbreak. For the data by industry, you can see that the biggest impact, around 0.5 percentage point, will be on the services industry. Again, because it includes tourism and transportation, which will be the industry that will be the most affected. And to a lesser extent, the impact will be on primary and secondary industry. But again, we assume some revisions on both industries by the end of the year. For the accommodation and catering sector, as I mentioned, this will be one of the two sectors that will be the most affected. So 6.16 percentage growth, a neutral forecast, and we revised this estimation by almost 2%. Under the baseline scenario, we estimate a 4.3 percentage growth for 2020 during under the baseline scenario, 5.2% under the optimistic scenario, and 3.4% on the pessimistic scenario. The situation with the transportation sector is similar. 2.5% revision of the outlook under the baseline scenario to 4.1% growth for this year, 5.2% growth for the optimistic scenario, and 3.1% growth for the pessimistic scenario. The retail sales, 7.3% outlook for the neutral scenario, and 5.1 percentage growth under the baseline scenario. As you can see, a big impact, more than 2 percentage points impact on the retail sales. Here are our revisions on the forecast for the world economy. For the global economy, 3.3% neutral forecast in line with the IMF forecast. We revised this with the baseline scenario. We revised this forecast by 0.3 percentage point, the revision is similar for the optimistic and pessimistic scenario, because we assume that a decline and a bigger decline under these two scenarios of the Chinese economy will be offset by stable growth in the US and the other advanced economies. As you can see on the second chart, the advanced economies, the growth in the advanced economies is revised by 0.2 percentage points, but there is no big difference between the three scenarios: the optimistic, the baseline, and the pessimistic one. Bigger impact. We expect a bigger impact for the emerging and developing economies due to the high share of the Chinese economy in this group. As you can see, from neutral 4.1% forecast for 2020, we revised this prediction to 3.4% under the baseline scenario and 3.3% under the pessimistic scenario. Here are our predictions for some of the major Asian economies. These are the economies, these and four more economies on the other slide, were the economies that were the most affected during the SARS outbreak, and it's expected to be among the most affected economies now due to their tight trade and financial relations with China. Before I proceed with the numbers, just one note here. We estimate the impact of a slowdown in Chinese economy on these economies due to the disease outbreak. So it's not a direct effect on the disease outbreak on the economy of Hong Kong or Singapore, because what matters here mostly is their relations with the Chinese economy than the direct effect of the coronavirus in these countries, even though all of them already have registered cases. So a big impact for the Hong Kong economy from a neutral scenario of 1.5% growth for this year. Our baseline scenario is the growth to decrease below zero for this year, and under the pessimistic scenario, the growth will decline even more by 0.4% in 2020. From the optimistic scenario, the Hong Kong economic growth will remain a bit above zero, 0.3%. Our projection for the Singapore economy is similar. There will be some effect, some strong effect on the Singapore economy because the Singapore is a trade hub for Asia, just like Hong Kong, a trade and financial hub. On the one hand, and on the other hand, China as a big part and a big player in the global supply chain, a decline in the Chinese economy will have a strong spillover effect on the international trade and on the regional trade, and thus trade centers like Singapore and Hong Kong will experience a great impact of further slowdown of the Chinese economy. For the other developed Asian economies, Japan and Korea, as you can see, the impact which will be much more limited compared to the economies of Hong Kong and Singapore, mainly due to the these are advanced economies that have higher level of diversification from, okay, they do have tight relations with China, but they have more exposure to other countries as well. For the emerging Asian countries, Thailand will be among the most affected economies, from 3% neutral for 3% growth under the neutral scenario. We revised this forecast to 1.95 under the baseline scenario, so more than 1 percentage point downward revision. For Malaysia, the effect is not expected to be that strong, but again around 0.4 percentage point decline compared under the baseline scenario compared to the neutral scenario. Some effect on Indonesia as well, from 5.1% growth to 4.7% growth under the baseline scenario. And for Philippines also, we expect under the baseline scenario around 0.4 percentage point revision of the GDP growth. So at the end of this presentation, I'm going to show you how you can use our publications and how CEIC data could help you for monitoring the latest data and analysis on the topic of coronavirus. So first, on the data part, in the daily database in CEIC data, there is a section that's called disease outbreaks. And in this section, you can see there is a daily data that are regularly updated on the coronavirus disease, as well as on some of the other disease outbreaks that happened recently. The charts that I showed you in the previous slides contains data that are extracted here, so you can use the coronavirus disease to monitor the latest data by using data from 3 sources that we use for the international data. This is the Center for Health Protection in Hong Kong. Very detailed data on the suspected and confirmed cases in Hong Kong. Also for Taiwan, we have the data on the Ministry of Health and Welfare, where you can follow the latest data in Taiwan, and the international data provided by the World Health Organization, with very detailed breakdowns by country and by regions in China. And for historical comparison, you can find here the data for the Ebola virus disease, for influenza, and for the other disease outbreaks that happened in the past. For China, as I mentioned on several occasions during this presentation, we use 2 main sources. One is the World Health Organization, and the other one is the National Health Commission in China. So in China Premium Database, there is in the health sector, there is a section disease outbreaks, when you can see historical data for the recent disease outbreak in China, as well as very detailed data on the on SARS and the coronavirus, number of patients, number of deaths, and number of recovered, with a very detailed breakdowns by regions, by aggregated data for the number of patients, number of death, as well as daily data for the new cases registered. And on the analysis part and CEIC product, you can see in CIC Insights, there is a new data insights called Coronavirus Data Monitor, when we prepared some visualizations and maps that are also updated in real time on a daily basis, and you can also use this these visualizations to monitor the topic of coronavirus. And the last thing, as some of you may have noticed, we launched a new landing page on the novel coronavirus outbreak, where you can find the part of the data that are available in CIC database that I've just showed you. We're also uploading there our forecast, our estimates that I've showed you during this presentation. And here we also add some latest news and analysis provided by other sources. We have news from our partner CEIC, as well as from other media. Okay, thank you very much. Bennett, back to you, and we open for questions.
Thank you, Alexander. It was a very insightful presentation. We have quite a lot of questions that are coming in. Alex, would you like to start with them?
Yes, sure. Just a second. Yeah, I see them. Okay, the first question, the IMF projects that most of the increases in GDP levels globally through 2021 will be driven by emerging markets, with no uptick expected for mature market. What is the potential impact of the crisis on developing market growth? That's a very good question, and I assume that by the potential impact of the crisis, you mean the potential impact of the current crisis with the coronavirus. If that's the case, what I can say is that I don't expect the impact of the coronavirus to last that long on the Chinese economy, and that's even more true in the world economy. Even though it's now in the news, and there is a feeling that this is the most important thing that's happening for the economy. I think the Chinese, because it starts from China, okay, it's spreading out globally, but the main fears are on the effects of China and the spillover effect on the global economy from China. But from what I've seen in the recent history of the Chinese economy, the Chinese authorities have a very good track record of handling such crises. I don't mean handling crisis in terms of protection of the population from the spreading out the disease, but I mean handling the economic impact of such crisis. So I believe that the negative impact on the Chinese economy of the coronavirus will be offset by the measures of the Chinese government on the demand side. So first, as we witnessed during the downturn of the Chinese stock market in 2015, the first thing that the Chinese government will consider doing is to increase the fiscal spending. They have a lot of room to react on this area. That's one thing. And on the other hand, in contrast with most of the advanced economies, the Chinese government and their central bank has still some room to react using the instruments of the of the monetary policy. So I think the policymakers in China will handle the situation. There will be some short-term effect, but I don't expect this effect to last after the end of this year in the worst case scenario. Especially for China, what I'm more concerned about is in the midterm, it's the negotiations, the trade negotiations with the United States. I believe in the midterm, this will have much more impact on China and the global economy than the coronavirus. But it's also manageable by the Chinese government. But what concerns me the most for China in the long term are the structural problems of the economy. This is something that can last longer. To name a few, problems like aging population, the depth of the state-owned enterprises, the slowdown of the technological growth. So these are things that can harm China and the global economy in the longer perspective. And these are things that require, okay, while the shocks like the coronavirus and even to some extent the trade wars can be offset with fiscal policy, I believe that the Chinese government should react on the structural challenges by using supply-side measures like structural reforms. Okay, another question. The optimistic scenario estimates that the virus will be contained in February. The pessimistic scenario that will affect the first trimester, and the basic scenario. The pessimistic, yeah, maybe I wasn't clear enough. So the optimistic scenario is that the virus will be contained by the end of February. The baseline scenario is by the end of March, and the pessimistic scenario is by the end of April. Okay, the commodities. Another question on the commodity statistics. The low in prices was in the price or in demand. I assume you mean the chart that I show on the market reaction. It's the price of the commodities, not the demand. I measure the price, the effect on the price indices of the commodities that were the most affected. Okay, Bana, do you have time for more questions?
I believe we have quite a lot of questions, but in the interest of time, we'll make sure that we answer everyone individually. And as I mentioned to everyone, we will be sharing the recording as well as the handout via email. You should be getting it, very soon. But thank you very much, Alex. As I said, it was a very insightful presentation. And thank you everyone for joining. We are a little ahead over time, and sorry for that. But thank you again for joining. Thank you, Alex.
Thank you. Bye.